We'd like to take a look at the carrot and the stick real quick. Why does the IRS require us to do this, and what happens to us if we don't? And we'll go through the W-9. We'll look at 1099 reporting requirements as well. We'll differentiate a little bit between information reporting on W-2s and 1042Ss versus the 1099. We'll also look at backup withholding rules and the 1099 world that is exception-based, in the 1042S non-resident alien world that is rule-based, and so they're very different. In the 1099 MISC is the most popular form, and I'm guessing that you may have some concerns, questions, issues about your prep this year. We have a lot of great notes for you. You should already have a PDF of the slides for today. If you don't, send a message and Muhammad will connect you with those slides, the PDF. We'll take a look at P-card reporting briefly. It's old news, but still pretty important, and I still find that people are surprised by the protections afforded by those tools. That's section 6050W of the Internal Revenue Code, and it's got to do with merchant card providers and your purchases that you have made on credit cards or procurement cards or travel cards, cards. Finally, we'll take a look at electronic submission of the IRS and transmission to the payees, and we'll look at where it's required on the submission to the IRS. Payees, optional. And avoiding penalties. Hopefully the work that you do with me today, the notes that you take, the updates that you make to your policies and procedures, and the training that you might institute inside the company off of what you've learned today will help everyone be more compliant going forward. The IRS issues a tax gap report every now and then. It's been a while. They're way overdue to issue a new one, but this is the most recent information that we have. You notice that the estimated total true tax liability is posted at the top up here as $2.5 trillion or $2.5 trillion. About an 81% voluntary compliance. The net tax gap's about $0.5 trillion, $406 billion. And we would take a look at the arrow points down below, particularly business income and corporate income tax. There's some underreporting, underpayment going on. And so this information reporting requirement that we have is to help the IRS find that money and get the tax dollars on it. This is just another graphic that goes with the report. It lines it up in a slightly different way, but you might find that helpful or interesting, maybe even informative to leadership who challenges the effort that you expend to be compliant with this arena. This is another part of the tax gap report. This is figure number 1. Notice the circles at the top, individual income tax reporting compliance. Note the increase in percentage as misreported or underreported as the level of information reporting and withholding declines. In the 1099 world, we're looking at basically column 3 and 4. Section described underneath in the x-axis by item 2. Income subject to substantial information reporting. We don't do a lot of withholding in this area, so if the information reporting is done, there's a 7% typically fail rate on others who receive these documents failing to report their taxes. So it's a pretty powerful tool. We're just letting you know the carrot. Now comes the stick. This is your first question today. What is the penalty for failing to file Forms 1099 within 30 days of when due? And if you want to type that into the chat box, that would be great. We don't set up formal poll questions with GRCTS, and so I'm just looking for your responses in the chat box. So type quickly, 1, 2, 3, or 4, or the dollar amount. I've got an answer coming in. Thanks, Joanne. Turns out Joanne is right. Those of you who get a chance to type and respond to the questions, please do so. Time doesn't permit us to be very long in dealing with any of these questions, So we'll put them up. There'll be a flashcard. If you can answer in the chat box real quick and you want to do that, that's great. There's the answer for 2018. You'll see there's a column for 2018. And the main thing that changed between 17 and 18 is the maximum penalty column. So these penalties rise the longer you delay. And if you fail to get a correction in until after August 1st or you don't fix a problem, the penalty per form is $270. If there's a pattern of misbehavior, you might be in for an additional $540 fine per form for a total of $810. And if you didn't file with the IRS, you probably didn't file with the payee either, so just double it. So this gets pretty steep pretty quick. So there's your penalty chart. Notice that the caps for small businesses are lower, and the definition of a small business is at the bottom of the chart. So that's a pretty healthy chart. I check the IRS website pretty frequently for updates on that information. It's pretty current. So when you get into developing your reportable obligation understanding, how would you couch your questions to someone who's trying to help you make the proper determination? Would you start with what you're paying for, or would you start with who you're paying? Which one of these would you choose to do first? Get your clarifications and understanding laid out in front of someone, and then make your decision about your reporting obligations. And there it is, Joanne again. Congratulations, she is right. What you're paying for, nope, you're in, but you're backwards. You want to start with who you're paying. You want to start with identifying who you're paying and narrow down the field of who you need to obtain these reports from. W-9s for starters, W-8s perhaps for non-resident alien individuals or companies, and of course W-4s for employees. You have to collect something, but you identify what you need to collect first. So you start with who you're paying. And then after you figure out who you're paying and what to collect, then you figure out what's reportable, and that means you move into what you're paying. So you start with the who and you move to the what. So here's the who, and we're trying to get down to the minimal number of reporting requirements or obligations in the bottom box of this slide. So at the top, your non-vendor payees or your employees. The statutory rules here are in Pub 15A, or also known as Circular E, pages 6, 7, and 8. And if you have any inclination to pick up references today and you want to bookmark those, go to irs.gov, hit the search box, and type in 15. And that's all you need to do. You'll pick up Pub 15 and Pub 15A. You'll look at pages 6, 7, and 8. I think it's 15A that contains what's called the three-factor test. It's basically the 20 rule test from the 80s reconditioned into the three-factor test under President Bill Clinton. And basically, if you're telling someone how to do the job, you've probably got an employee. And the question is, well, just exactly what does that mean? And that's why the three-factor test is so detailed. There's also a Form SS-8 that goes with those tests. It's a nice survey or profiling tool. And if you're so inclined to fill one of those out, I would strongly recommend that you not send it into the IRS. We're hoping that you will have the knowledge from today's discussion and that reference to the three-factor test in order to make a proper determination on your own. The IRS receiving Form SS-8 may write your company's name down and set you up for a visit. So use it internally. Try to make your own determinations if you reasonably can. Part 2. In the second box, we have the 1042S recipients, which are non-resident aliens. This will indicate probable backup withholding requirements, whereas on the W-9 1099 environment, we have an exception-based reporting. When something goes wrong, withholding has to take place. In the non-resident alien world, just the fact that you're paying a non-resident alien triggers a de facto withholding requirement with some exceptions. That's a topic for another day, but I'm trying to differentiate here for you and narrow down the field as much as possible on who you need to collect information on and report on in the 1099. It is number 4, an individual taxpayer identification number. An EIN is a tax ID number for an employer, but if it begins with the number 98, it's a foreign entity. The problem is the IRS ran out of the 7 digits available for foreign entities, and now they have offered up or extended numbers to foreign entities outside of the 98 series. So you must perform a reasonableness test based on the information that your company knows about the payee to determine whether they might be a foreign entity. If they are, pull the W-9 that they sent in, start with a W-8 Ben-E, ask them to visit with their tax advisor, see what comes back. Social Security numbers are at the bottom. You know the drill. 3 digits, dash 2 digits, dash 4 digits. An I-10 looks just like a Social Security number, but the clues are the first digit will be a 9. Social Security numbers do not start with a 9. They now start with 8s and 7s, but they don't start with a 9. In the 4th and 5th position, if you have a 50 to 65, 70 to 88, 90 to 92, or 94 to 99, you're looking at an I-10. In all likelihood, you are dealing with a non-resident alien. A resident alien might still possess an I-10. So you have to distinguish between those who are resident aliens entitled to W-9, 1099 treatment and non-resident aliens that are required to be treated on a 1042S starting with a W-8 Ben. Again, topic for another day. Certification language. This is the part that if you make a substitute form up, you have to match that language. That language has been consistent for about 3 years now. The bottom, Part 2 certification, last page of instructions for the W-9. Form W-9s requiring a signature, electronic allowed except for B notices under penalty of perjury include the ones listed at the bottom. I call them my IBDOPs. Interest, broker, dividends, OID, patronage dividends, and real estate. S. IBDOPs. If a W-9 is submitted back to you under a first B notice mandate, in other words, you sent out a request and required the payee to send you a new W-9 because their name and number don't match the IRS's system, and the error is not in your system, they must sign it. It must be a wet signature. It must be ink. A fax, an email, or an electronic signature of any type will not suffice. For IBDOPs, signatures obtained must be obtained under the Treasury regulations regarding electronic signatures. And those regulations are uncomfortable. They require that the payer maintain control of the system until the signature is attached to the form. This means that a signature on an emailed W-9 where it is required under this list, IBDOPs.
Thank you so much for taking a few minutes to watch this clip from one of our online meetings. Please don't forget to subscribe to our channel, stay up to date and stay compliant. This video is brought to you by GRCTS. We are also known as GRC Training Solutions. And here's a quick information about us and what we do. We conduct many compliance and non-compliance training courses throughout the year, covering some of the most important areas within several industries. Our focus is to provide the best and the most up-to-date classes to our audience. All training modules are designed and facilitated by industry subject matter experts who possess years and years of experience and understand compliance very well. Our customers attend our online classes from all over the world. If you're not available to attend the live meeting classes, you can always opt in to get unlimited access to our on-demand or recorded classes. We also provide in-person and face-to-face workshops. on-site workshops where our experts will visit your company at your location and train you and your colleagues, LMS trainings, and finally corporate subscription plans where you pay a little amount to enjoy unlimited access to our courses. We have monthly, quarterly, and annual subscription plans. Here's our contact information for you. If you're interested in learning in any of these topics, or if you know a colleague or a friend who might benefit from our classes, please contact us or visit our website for more information. It's www.grcts.com. You can always send us an email, support@grcts.com, or just give us a call, 248-233-2049.